Good morning. I'm Scott Redler, Chief Strategic Officer of T3Live.com. Welcome to today's Morning Call Express. So you come in today, futures are down 7-8 handles. You can contribute it to so many different factors. There's ongoing weakness in Europe. There's talk about putting off the Greece situation one more time. Every headline you look at, they're talking about the fiscal cliff. You saw earnings that were pretty lackluster. Overall, the whole deterioration of the market has been a process that did not start yesterday. It started in early October when technology started to falter and we started to lose some key moving averages. Obviously, everyone approaches the market with a different plan, depending if you're a macro investor, an intermediate trend trader, or even an active trader. And there's been many different spots to switch gears. So recently we talked about the importance of the 200-day moving average in the S&P. Because if you recall, last June, after we had about a 9 to 10% decline off the highs, we broke the 200-day, became a seller's trap. And then within 2 days, we reclaimed it, and that started the next move to the upside. So over the last 2 days, we've been hovering around the 200-day, and we've talked about the lack of interest, the lack of intensity of dip buyers coming in, and now we're almost below the previous pivot. If you look at the chart of the S&P, let me show you what I'm talking about. First things first, this is when the accelerated trend broke. This was a spot that a lot of guys that trade intermediate trends like me said, get tactical, get away from portfolio approach, and get to cash. Right in this area also is when IBD went to market correction versus, uptrend intact, which means be a bit safer. Then you had the June 4th low, which I just mentioned. That was your more gradual trend that broke right around here. So this was your other opportunity to sell some. And then recently we've talked about trading a level versus a level. And this 1403 to 1408 was trying to be a floor. Okay, and then what happened the day after Election Day? Pow! Broke right through it. If you were trying to trade stocks versus this area, this was your area to be stopped out. Because if you got stopped out around 1403, you're feeling a little bit better and you have the luxury of maybe trying the market in this area. Because right now, here's your 200-day. 1373 is the recent low. Here's your lower pivot. We're going to be opening right around there. If we can't reclaim this 1373 today, the next real level comes into play down at 1345, which would be another Fibonacci retracement. If I want to show you right here, the fibs, which we've been talking about, right now we are at the 50% retracement, and and if this doesn't hold, the next level comes in right around 1347-ish at 0.618. So with that said, it's unfortunate because we're going through very dangerous times right now, and you never know how deep a correction is going to go. That's why we talk about trading levels versus levels. I understand if you have a long-term plan, stay to it. If you put money in monthly, continue. But if you're trading individual stocks, you need to be very close and aware of what things are doing and how they're acting. As far as Apple, which I think could give some clues of today, the stock has been, on sale ever since it broke the 21-day moving average there. Then it failed to hold the 50, it failed to hold the 100, and here we are at this lower pivot. I did try some on Friday, and then yesterday sold because there was a lack of commitment. So today, I'm going to look at this area. I'm going to see how it handles this 533.72. If it holds and shows some leadership, maybe it'll help take the stocks off the lows. If you sold correctly when it broke this area, broke that area, you have the luxury of trying it. And nobody knows if it's going to hold or not. That's why we're going to let the market tell us. As far as other areas that have been getting weaker, the banks lost a 50-day. I would look to the banks to see if they can go green, if they can help lead us off our lows. Here's XLF. You take a look here, this was your high-level stop. This is when it broke this key area, and now it's heading down to actually the 100-day. It broke the 50. That was your intermediate spot. So the question is, can XLF hold 1540? So I would watch out to see how Goldman, see how JP Morgan, see how some of those names, hang in there, if anything can go positive. Recently, yesterday, the home builders started to give way a little bit. So if you take a look at the XHB, hopefully here you also had a high-level stop. I talked about this trend line that was coming into play that just started to break at the 50-day, probably opening below it. So things do change, and you need to switch gears. At this particular point, I hope you didn't wait 100 handles to start selling some stock because there's been so many signals along the way. At this point, I think there will be opportunity, but let it show itself. A lot of guys were trying to buy the last 2 days because we were at the 200-day, but we really had no signs. Let's see if there's a better sign today. And just remember, bad times lead to good times. Keep the powder dry, and we will have clear setups. Stay tuned for a more thorough morning call that will be coming out later this morning. Have a great trading day.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.